What if I told you that no matter what you think about Bitcoin, whether you love it, you hate it, or you don't even understand it, well, either way, you're going to be completely underprepared for what's about to happen next, because there's a new bill, S4912, and it's about to ignite a chain reaction that sends Bitcoin further and faster than most anyone can imagine. And this isn't just a theory. As a matter of fact, this is already in motion. So in this video, I'm going to show you what this new bill is, how it's going to change the global financial system forever, how a small nation's experiment gives us a glimpse of what's about to come, and why nation-state FOMO is going to put us on a path to prices that make today's numbers look maybe laughable. Now, real quick, my name is Mark Moss. I've been a tech-focused VC investor for over a decade. I've been creating Bitcoin educational content since it was only $300. Today, I'm a partner at a leading Bitcoin VC hedge fund, and I coach business owners on investing, and I'm sharing some of the data that we use to make long-term decisions. So let's go. All right, let's break this down why no matter how bullish you are, you're not bullish enough. And if you think this is some big joke and a scam, well, you're also underprepared. So let's break this down. We're talking about S4912. This is a real thing. Now, let's rewind the clock just a few months ago, not too far back, before the presidential campaign ended, and we still had a race going on. I was speaking at maybe the biggest conference in the world right now, at least probably the most culturally relevant event in the world. Over 25,000 people were there, 2 presidential candidates, some of the highest level Wall Street people, investors, coders, builders, entertainers were all there. I'm talking about the Bitcoin conference. I got to speak on the main stage about 2 hours before Trump was there. And at the time, RFK Jr. was still running for president. We had Trump was still running for president. And they both came there and basically laid out their plan to have a presidency for the U.S., a direction for the U.S. that would be very pro-Bitcoin. Now, RFK Jr. laid it out in very great detail. Trump gave a little bit more of a vague overview of it. But now, of course, they're together, working together. And basically what they said is they wanted to have a very pro-Bitcoin stance, and part of that would be to have the United States establish a Bitcoin reserve. Now, since that's happened, obviously, as I said, they both joined together. The Trump administration won, and now they're working together to do this. But it's not a theoretical maybe, we'll see in a month or two when he takes office. No. We're talking about something that's already in place right now. I'm talking about, again, 4912. As you can see, this is already in Congress. To understand this a little bit, at the same event, at the Bitcoin conference, we heard Senator Lummis from Wyoming, Cynthia Lummis, she actually laid this out. Let's hear from her real quick.
To establish a Bitcoin strategic reserve to ensure the transparent management of Bitcoin holdings of the federal government. Over 5 years, the United States will assemble 1 million Bitcoin, 5% of the world's supply.
All right, so you heard it directly from her of what she wanted to do. And again, this is not theory. This is in place right now. So let's pull this up. This is a bill that has been submitted already, S4912, and I want to show you just a little bit of what's in here so you can understand the mechanism and how this works. So it's a Bitcoin purchase program, and basically the way they're breaking this down is that the Secretary of the U.S. shall purchase 200,000 Bitcoins per year over a 5-year period. 200,000 times 5 years is 1 million Bitcoins. So they want to have the U.S. buy 1 million, and then hold that. Hold the Bitcoin, buy it, not try to sell it, keep that there. Minimum holding period to ensure the long-term stability and security of the Strategic Bitcoin Reserve, SBR. The Secretary shall hold all Bitcoin acquired through the Bitcoin purchase program for not less than 20 years. 20 years. Strong hand. Hodler. Now, there's precedence for this, obviously. The U.S. has strategic reserves of oil. For example, we talked about how Biden dumped the oil reserves to bring the price of oil down. We have gold reserves, obviously. So this is not unnatural at all. And what the president wants to do, and Senator Lummis wants to do, is basically bring Bitcoin as a strategic reserve to match the gold reserve that we have. And by doing this, put the U.S. on a strong financial footing and potentially maybe even pay off the debt. Now, that may sound crazy, but again, maybe you're not thinking big enough. Let's talk about this for a second. Now, Does that seem possible? Well, let's just take a look at a case study, shall we? Let's use some real factual stuff. As a matter of fact, I'm going to go back into history to show you some stuff, so hang on. You may think you know what we're talking about, but let me show you how big this is. So first off, let's start with a case study, okay? Now, El Salvador is a case study I want to break down. We'll look at more historical examples. But El Salvador, in 2021, decided to make Bitcoin legal tender, accept Bitcoin as legal tender. And not just accept Bitcoin as legal tender, but actually have the government buy Bitcoin and put it on its books. Now, when El Salvador did this, most of the world ridiculed them, told them it was stupid, it was ridiculous, and all these things. But let me just tell you something about technology and people that think it's ridiculous. Now, we can go back as far as you want to go. The term the Luddites were afraid of the power loom, right? And every time there's new technology, people are afraid of it. In 2001, after the dot-com bubble had burst in 2000, the next year, I decided it'd be a great idea to start an e-commerce business. Now, it wasn't easy, no Shopify, no Amazon. I had to hire a coder to custom build this e-commerce website, super clunky. And I went to these brands and I said, hey, I want to sell your products on my website. And they laughed at me. They told me no one would ever buy anything online. I said, well, I beg to differ. I'll give you the money. No big deal. And they said, we don't even want our products being sold on the internet because it was sort of a joke after the dot-com boom. And so the Luddites also said that El Salvador was crazy for doing this. Well, joke's on them because now we've seen the full benefit of this. Billionaire venture capital investor Tim Draper recently said that earlier this week, Tim Draper claimed at a rally that on this Bitcoin rally, if Bitcoin gets to $100,000, which it's almost there, time of this recording, we're a few $1,000s away, Bitcoin would allow the country, El Salvador, to repay its IMF loans and never have to talk to the IMF again. Now, the IMF gives money to countries to basically indebt them forever. There's a book written titled The Confessions of an Economic Hitman that sort of breaks all this down in great detail. And instead of allowing nations to get out of debt, they just give them more debt. But what Tim Draper's saying here is this move that El Salvador made could now allow them to pay off the IMF debt and never need debt again. Let's break down the math. The claim sparked a discussion about how much debt El Salvador owns and how much Bitcoin can contribute to easing its burden. Now, specifically, El Salvador owes 107.7 million SDRs to the IMF, which are worth about 1.35 USD apiece. So if we break that down, basically the country owes approximately $80 million to the IMF. Now, here's where the math gets interesting. So El Salvador bought a bunch of Bitcoin, and it's now going up in value. El Salvador claims to own 5,913, almost 6,000 Bitcoin. Now, currently, this was written when it was 67,000. Now we're over 90,000. But if Bitcoin were to rally and hit Draper's 100,000 threshold, El Salvador would gain 189 million from its holdings. So it gains 189, but it only owes 80. Do the math. Okay, so now that sounds amazing, right? But here's the thing. In the world of game theory, you have to understand the world is very competitive. Now, if you're a business or you're a Wall Street fund or you're a nation, you're competing against others. Now, on Wall Street, if I were to do something different, like bring gold into my portfolio or do high-frequency trading or use Bitcoin, and I would get ahead of other funds, and other funds would sort of be forced to copy a lot of what we're doing. And the same is true with nations. Now, the thing is with El Salvador is they are one of the poorest nations in the world. So they're not like a big influential nation. They're not influencing, the top countries, the G7 countries, if you will. You can see here on this chart right here that El Salvador, out of the North American countries, not the whole world, but the North American countries, it's about, the fourth poorest country in the North American hemisphere. So it's not really influenced a lot of countries. However, given the case study that El Salvador's have, other small nations are starting to pay attention. And not just a couple. As a matter of fact, it's a lot. So what we can see right here is that President Bukele of El Salvador met with 44 countries in May of 2022. El Salvador hosted a meeting with financial institution representatives from 44 countries. I'm not going to read them all to you. We'll link this in the show notes down below. Argentina visited in October of 2024, so just recently, expressed interest in El Salvador's experience with Bitcoin. Other nations, Bhutan has put in over $1 billion into Bitcoin. So 44 nations, Argentina, Bhutan's already got $1 billion. So El Salvador is influencing countries. This is happening. They've paid off the debt trap, and now this gamble's paid off. Now, of course, in the competitive world that we have, in the world of game theory, like I said, competition's real, other people are starting to pay attention. But again, El Salvador is not very influential. What if the most influential country in the entire world were to do this? Of course, we're talking about the United States. Now we'd see something very different. If the U.S. moves, the U.S. having the U.S. dollar, right, the reserve currency of the world, the global financial system of the world, if the U.S. were to do this, which, as I said, it's already submitted, the bill's already there. We have a red now, Republican-led Senate and House and presidency, and there's a very strong chance this bill will go through. I'm going to show you why I think that in a minute. But if this happens, if the U.S. moves, then the entire G7, the top 7 countries of the world, the G20, the top 20 countries of the world would basically be pressured into this. Now, this is not my speculative guess. Don't rely on me. Let me show you the receipts. Let's look back in history. So there's a couple times this has happened. Now, for you history buffs, you might know this, but there's been lots of money throughout the world. And at one point, the world was on a silver standard, all right? But then the world started to transition from a silver standard to a gold standard. All right, so the money supply has changed many times. The reserve currency of the world has changed many times. And here we have when the world started going to a gold standard. This was in the 19th and 20th centuries. And it was a gold rush. And then each nation started to do this. And we can see here that Portugal quickly implemented the gold standard in 1854. Germany had already started doing the gold standard as well by 1871. The U.S. adopted the Coinage Act of 1873. So by 1900, most countries had begun using the gold standard except China. This is a very key piece to understand here. In the world of game theory, this is very important. So the whole world started leaving silver to go to gold, as I said. But China decided, nah, we ain't doing that. We have a lot of silver. We're not going to trade it for gold. We're going to stick with what we have. The problem with game theory is they were left out. So as the whole global financial system moved to gold, China was out. And they lost their position as a global leader. Now, I made a video a long time ago talking about how now China has been trying to get back to that position for about 100 years, and now maybe have cornered the gold market. But just as they've cornered the gold market, now the whole world is starting to shift again, or it could if this happens, and I'm going to show you that. Now, again, it's not just gold. Game theory is real. Let me give you a couple other historical examples. So here we have the space race. So when the U.S. and Russia were in this Cold War, they were both rushing to get to space, to who could get up satellites and things like that, who could control space. Now, we see the space race was a competitive competition between the United States and the Soviet Union. It began in 1955 when the Soviet Union responded to the U.S.'s announcement to launch artificial satellites. So it was a race. Who's going to win this? And the first mover, of course, always has the advantage. There was no set rules at first, but President Kennedy, and this is a key piece here, there were no set rules for this at first, but somebody threw down the gauntlet. That was President Kennedy. He set a clear goal for the U.S., which was land a man on the moon before the Soviets. Sort of like the president now has also thrown down the gauntlet and said, we have a clear plan to establish a reserve of 1 million Bitcoin. Once it's down, it's laid out on paper, now it gives people a target. So once that happened, then the race was on. And we can go back, I'll give you one more example, we can go all day on this. We can also see the same thing happened with nuclear. So there was the United States versus the Soviet Union, which is called the prisoner's dilemma, which is basically this nuclear arms race. So we're trying to build up our armies as fast as we can, but basically it caused both nations to pour trillions of dollars and resources into manufacturing nuclear weapons. And the reason why this is the prisoner's dilemma, it's basically a situation showcasing why two players may act selfishly, even if acting selflessly appears to be in their best interest. For the two options. And so that's exactly what's happening. We've seen this happen over and over and through history. We understand incentive mechanisms. We understand game theory. So that's why this is not speculation. The gauntlet has been thrown down. The bill is put forward, and the chance of it going through is extremely high. And now every nation is trying to figure out, well, who's going to move first and how fast are they going to move? Now, the interesting thing to understand about this is that this is all creating what I'm calling sovereign FOMO, right? Each sovereign nation has fear of missing out. And we have sovereign FOMO where demand is going parabolic. But it's going into an immovable object or basically a fixed supply. So the thing with commodities, so oil, uranium, copper, silver, etc. The thing with commodities, and Bitcoin is a commodity, is that it's unlike an equity. We set the price of a commodity based off of supply and demand. Now, the supply of oil is it's very hard to dictate, right? I mean, we have all these different nations pumping in different schedules and different time frames. But with Bitcoin, we have a fixed supply, 21 million. So it takes the supply side out of the equation. So all we have to really pay attention to is the demand side. So we know that, like I said, Bitcoin has 21 million. Now here's where things get interesting. Let me break down a little bit of math for you. So here's just 2 buyers. Now I've done videos talking about Michael Saylor and MicroStrategy. I talked about the infinite money glitch. Maybe we can link that video in the show note down below. You should understand what Michael Saylor and MicroStrategy is doing. But here we have some math. So there, right now, we have about 164,000 Bitcoin being produced per year through mining. 164,000 per year. Now, per Michael Saylor, MicroStrategy plans to buy 175,000 Bitcoin per year for the next 3 years. Just one company, just one. Then Senator Lummis's bill, the United States government, says they want to buy 200,000 Bitcoin per year. So just 2 people, just the U.S. and MicroStrategy, plan to buy 375,000 Bitcoin per year. The problem is there's only 164,000 being created per year, which means there's way more demand than there's supply. Now, this is just 2 buyers. This is not accounting for the sovereign FOMO that's about to happen. And now you can start to see how quickly this can run away. Now let me show you a couple other things. Now we can see right here, this is Bitcoin on the exchanges. So this gold line is the Bitcoin price, and this green line is the amount of Bitcoin that's available to buy currently on exchanges. And you can see as the price goes up, the available Bitcoin in the ecosystem to buy right now is going down. Now, there's always going to be Bitcoin to buy. So for everybody that's going to go, yeah, then everyone's going to hoard it, and all these people that get a first mover advantage, lucky for them. No. There's always going to be Bitcoin available at the right price, supply and demand. That's how this works. But we can see how this is already setting the stage for FOMO. Now, we can look at this chart, which I think is pretty interesting. And this shows the amount of Bitcoin addresses that have at least 1 Bitcoin in them. And what we can see is there's about 1 million addresses, wallets, that have 1 Bitcoin in them. Now, let's think about this for a second. In the United States, there's about 22 million millionaires. 22 million people have at least $1 million. Okay, but there's only 21 million Bitcoin. And only 1 million so far have even 1 Bitcoin. In the world, there's about 60 million millionaires. And there's only 21 million Bitcoin. Do the math. You can see, and now this is not accounting for the MicroStrategies and all the other corporations coming on board. This is not accounting for the sovereign FOMO that's about to happen. And what this does is it sets a floor on the price, okay? So this is very interesting. So when you think about buyers, whether it's me or you or maybe a hedge fund, right? You're like a price-conscious buyer. I want to buy on dips. If the price goes up, maybe I'll sell a little bit. I won't sell a little bit, but I'll certainly buy on dips. I'm trying to sort of trade around and find the right price floor. But some buyers, like nations, for example, are not price sensitive. So Michael Saylor with MicroStrategy, for example, is not price sensitive. They just bought, MicroStrategy just acquired another $2 billion worth of Bitcoin just a week ago at 80,000. And he says he's going to continue to buy every top along the way. So no matter what the price is, they just buy on a regular basis, dollar cost averaging in. Nation states are very similar. They will just continue to buy. They're not trying to trade around the price. So what that does is it sets a floor. So we have nations who are not price sensitive, corporations like MicroStrategy who are not price sensitive, and they're buying more than is being produced. So that means there's more demand, a floor of more demand than there is available supply, which is pretty interesting. And as I said, we know there is certainly not enough to go around. So what does all that mean? What does that mean for us? What does that mean for us whether we think we're bullish on Bitcoin or you think Bitcoin's stupid and ridiculous? Either way, let's show you what this means. So what happens is Bitcoin sort of moves in these cycles, right? Nothing's ever gone up in a straight line. There's never been an asset that's gone up in a straight line. And so we have peaks and we have valleys and a new peak and a valley, and it sort of works like that. Now, as this goes up, it sort of moves in this line, but we have a high point and a low point where this could be. So if this goes through, I believe we'll be on the high side. I'll show you what the high side is in a second, but let's just talk about if this goes through. So what we can see is we already know the bill is already submitted. We know that we have a Republican bill with a Republican president and a Republican Senate and a House. The chance of this going through is extremely high in my view. And we can see that Senator Lummis is already saying that this bill could maybe should pass in the first 100 days of being president. So this puts us into the end of Q1 next year. All right, get ready. The end of Q1. Now, she's already talking about maybe we need to get this done in 60 days or even 30 days of the presidency. We don't know how fast it's going to happen, but probably within 100 days is what they're looking for. Now, is that realistic? Well, we know that it's not just the U.S. Remember, the U.S. will influence everybody else. So now we have independent states in the United States who are already doing the same thing. For example, just this week we saw Pennsylvania introduces the same bill where Pennsylvania, as a state, wants to move a bunch of their money, their treasury, into Bitcoin. As a matter of fact, they want to move $700 million into Bitcoin. And this is through bipartisan support. This is not a Republican thing. This is Republicans and Democrats both want to do this. And so even if it doesn't go through the House or through the government, through the United States government on the first try, even if it doesn't, which is not my base case, we still have states moving to do this on a bipartisan level, and we know that it'll come back through. Now, even if this bill were to fail, it looks like Trump could still do it, even without this bill another way. Trump could put billions into the U.S. Bitcoin reserve without Congress's approval. David Bailey talks about how $10 billion could be put into a reserve before needing to get Congress's approval for funding. So President Trump could potentially already move this way, even if it fails, because there's lots of ways he can do it, and we have this controlled House. So again, my probability is there is an extremely high probability this goes through. Again, within the first 100 days of the presidency. And again, I'm not the only one seeing this. Other nation states are watching this, and other nation states are already trying to FOMO in, and that's why you're starting to see the price go up, but you're not ready yet. Now let's think about this again, so you can see the price goes up and down and up and down and up and down and up and down, but it moves in this range. And so we have a high part of the range and we have a low part of the range. And so we can look at, if we follow this same trend, what would be the high and the low that we could expect in the future? Let's just look 1 year out. So by the end of 2025. Potentially, we can be as low as 96,000. So right now we're at about 90. So we'd be a little bit higher, about 96. That'd be the low end. The high end would be 584,000 per Bitcoin. That'd be at the end of next year, depending on this range, this channel that we've been in. Now, given the institutional FOMO and now the sovereign FOMO that's happening, I'm betting that we're going to be much more on the high end of that. Now, if we look out to 2030, which takes us through another halving cycle, another liquidity cycle, the high and the low is 365,000 by 2030, and the high would be 5 million. I don't think it's going to be anywhere near that high. My numbers are much lower than that, but even still, it's going to be enormous. But we really can't say, because when we have this sovereign FOMO coming in who are not price-conscious buyers, and they all want to get their bags full into an asset that has very, very limited supply, the price can move really fast, as we've seen. We saw almost a $10,000 move just the other day. So what do we do about this? Even if you think this is ridiculous, as Satoshi told us, you might want to get some just in case it catches on. So how do we do that? We can either DCA, dollar cost average in. This is sort of what MicroStrategy is doing. They just buy on a regular basis, regardless of what the price is. So you get paid every 2 weeks. You could put a little bit of your paycheck in every single 2 weeks, maybe every month or every quarter, whatever that is. Or you could just lump sum, like, hey, I'd like to move 5% of my portfolio in. I think 5% is sort of the minimum that you should have. Paul Tudor Jones, legend on Wall Street, says 5%. And so maybe I say, hey, I'm going to move 5% over, and let's just move that right now. So that'd be like a lump sum, or I could just move in regularly. Now, I'm not going to spend time going into this. If you want a video on this, I can. Once we've started buying it, then where do we buy it and how do I take custody? Do I want to take personal ownership and secure this on my own, or do I want to leave it in an ETF or leave it on an exchange like Coinbase or Gemini? That's a whole nother topic. If you want to make a video on that, leave me some comments down below. We can do that if you want. But as I said, you are not prepared for where this is going. And if you want to know what else is fueling this, again, not just sovereign FOMO, but we also have to understand the debt cycles, liquidity cycles, then you might want to watch this investing black hole video right here. And that's what I got. All right, to your success. I'm out.